Welcome to the closing bell on the 14th of May. I recorded this on the 13th, of course. As usual, don't know what happened in the US on Friday night. But safe to say that the things I've been discussing with you over this past few months are starting to take shape. We are seeing some pretty dramatic downside with the S&P 500 cracking through those key levels. Pretty serious selling, but really not at a point of capitulation yet, I don't think. But it is getting to an area where we could see some sort of short squeeze. So just want to outline a few of the big picture things, show you how things can play out from here, and really how far down I think markets could go. We've seen some pretty big moves in Bitcoin and, the breaking of the buck on that UST and the Luna thing crashing to zero, showing you that, some of the plumbing at the back of some of these cryptos is a little bit questionable, and the fear is out there. I think a lot of those, other coins other than Bitcoin, for me personally, I think a lot of them are going to end up going to zero, with a few exceptions. I don't know much about the area, so I'm not going to say I'm an expert. This is just 30 years of experience following markets and following the madness of crowds, trying to make a quick buck. And it really feels like there's a bit of a deleveraging going on through that crypto space. And that can be a hint also at, the rest of the market as well. The tech stocks getting absolutely pummeled. Really things unfolding as I've been saying. So I'm hoping a few of you, I've got a few comments in the video below in the YouTube section, and please leave a comment if what I've been doing has been helping you out. Press a like button if you are liking the video, just for me to get a sense that, these videos are worthwhile to you. You're getting a sense of how I look at things. And look, hopefully one day you're going to join Pivot Trader, right? That's the whole idea behind why I'm doing these videos, to show you that I do actually know what's going on out there, and I can protect you from these types of big moves to the downside, and, get you on things once the dust settles. That's the whole idea. Hopefully you're starting to build a picture of how I look at things. Today I'm going to show you the current state of play now that things have cracked, and how I could see things sort of developing from here. So let's jump to the charts. We're going to start with the US 10-year bond yield chart, because that's sort of the crux of all asset markets, I think. And we've been following this closely for a long time. And the thing I've been pointing out is that the yield was racing up. And remember, when this chart is a weird chart in that it's looking at yield. So when the yield is going down, the price of bonds is going up. When the yield's going up, the price of the bonds is going down. So you have to understand that to start with. And, looking at, the highest yield for the past decade, going all the way back to, 2011, the highest yield we've seen, and the big resistance level is around this 3%, and 3.25% was the level where I'm saying, well, above there, watch out. It could get disorderly. Now, the buying has stepped in, and look, with stocks really getting hammered, with the fear driving things, with the US dollar spiking, as their yields rise and as people repatriate money home from investments offshore, some of that money flowing into bonds, I'd say, with yields now above 3%, US 10 years, is that now possibly not a bad place to park some money? So we've got to be thinking things can change quickly as everything sells off. Potentially the bonds are going to find some buying support around here. And we have seen that. We've got the US 10 years hitting 3.2%, and they've backed off quite dramatically to 2.88%. But, really the move is still massively to the upside, but it's a bit, I'd say overbought here, but oversold really, because that's the price going down, right? So those bonds probably oversold. So, a bit of a balancing up period can happen, but then it can go and test that level again. So there's no guarantee that this is, the point when the bond yields will completely back off, but it may be that we do see a bit of a mean reversion to those moving averages, which could ignite a bit of buying in stocks again, could settle things down. So we've got to keep an eye on that. I guess the point being that we haven't seen that 3.25% level break. And that's when I'm really getting concerned that those bonds could go into a bit of a free fall situation. And look, that could be coming. So you've got to have that in the back of your head as something that can really be the thing that ignites that really next big wave down in stocks. But for now, we can, I guess, take the pressure off and say, right, there's a bit of buying coming into these 10 years now, and it is at a massive resistance level for yields. So, that could be it for now. So, yeah, if you're short the bonds, I did tell you to buy that TMV contract as a hint quite a while ago, and a few of you did, I've heard, and that was up nearly 100% in the last few months. So, you'd be considering taking some money at least out of that if you have that position. That's been a great hedge, hasn't it, on the market, which is what I wanted you to tell people about. That contract was as a great hedge on your other positions. So moving on quickly, I do rabbit on, I know that. S&P 500, this is the weekly chart that we've been following for so long. Telling you about those trends we're watching. 10 exponential, 10-week exponential above the 20 simple. It's crossed over there. We're saying, look, this is a period when things can sell off dramatically. You can see the black diamond there. That was the weekly sell pivot. I told you about that at the time. Failing back below the 10-week exponential was the next leg down. Then I was saying, watch out below this low, because that's when things can start to really start selling off dramatically. And we're seeing that this week. So the question is, where does this market find a base? Is it time for it to have a bit of a short squeeze? And look, this is how these bear markets unfold. So often it moves in fits and starts. You'll remember, we had this sell-off, and then look at that big short squeeze, which took it all the way up to the sell zone exactly. But, that's 3 weeks of just relentless buying that puts all of the people who are short under a lot of pressure before it's ready for the next leg down. And then this is often how it moves, get people bullish again, and then the selling comes in, and then you have the next leg down. So it can take time, and, you can't get too cocky and be sort of entering short positions here or anything like that, even though I think it could keep going, and there's no signs yet that it's turned back up. So while something's trending, you don't want to be guessing and second guessing and saying, oh, it's sold off far enough now, or the RSIs are oversold, that sort of thing. Once the market's trending, especially, down, I mean, it can stay in an oversold situation for a long time. So you want to really let things happen while they're happening, and, have the rules for when you're saying, oh, things are turning back up. So really, I'd need to see like a weekly buy pivot from here. Let's say next week it manages to turn back up, has a weekly close above the high of this week's range. That would be a little false break of that low. And then, we could then have a bit of a squeeze, which would just be taking it back to the moving averages again. And, the way I'd be looking at this would be analysing this wave to the downside and saying, where is the resistance going to come into this wave? And if we look at the sell zone of that, there it is up there, up around where the 20-week moving average is. So, that would be a mean reverting type of a move. And boy, I reckon there'd be lots of selling pressure up there if we had a squeeze. But that may not happen. But if it did, I'd be pretty keen and saying, look, lighten up the load there, because the big picture is really of looking at the long-term picture and this rally, which was hot air created by the Fed, as far as I'm concerned, and we've really had a very steady trend, which means there's not really that much support on the way down once it cracks. So I feel, fairly confident at the moment that we are going to see at least a move to the midpoint of that range, and that was down at 3,500. And look, it could get there over the next 3 weeks. I mean, it could just keep trending now that it's cracked. And that is also the high prior to the crash in 2020. So that sort of area is an area where I feel pretty confident the market will ultimately get back to. Now, how it does it is, of course, in fits and starts. Looking good, whoops, no, and then very quick move. But really, ultimately, I do think that a bigger move towards the buy zone of that whole wave, which would be down at 2,600, 2,800, I think that could happen. But, these things take time. It could be a year until we reach that sort of nadir when everything's really getting hammered and looking terrible. So, I think the way it's moved in the last few weeks, the last month, I mean, it's really confirming for me all the things I've been trying to warn you about. And even though we may see these short squeezes along the way, I think you don't want to be caught out. You can trade them short term, of course, take profits pretty quickly. But big picture, you want to be a bit wary. So if we're looking at the monthly chart on the S&P 500, the main point being we have the monthly sell pivot in place. We've cracked underneath the 20-month. So, a lot of things in place. We haven't seen the trend shift yet. So that really hasn't happened. But there's just a lot of things going on here saying watch out. And the point of support, how I'd look at this is I get that range on the monthly sell pivot and that level 618 outside the range, the Fibonacci level outside, that's where I'd expect to see support short term. And we are seeing a bit of buying from there. So, it could do anything, go back up to the sell zone of that range before turning down. But big picture is that we've now got the monthly sell pivot in place. Until I see the monthly buy pivot, I'm bearish this market and think it can head lower. It's way overbought. You look at the MACDs over the past couple of decades down here, and you can see, usually the MACD tops out around this level, even in, big, long, strong, steady rallies. But here we've got this outlier, this really crazy rally, which is like a blow-off rally over this past year. So for me, it's sort of like, well, we're probably going to see some sort of mean reversion event that's going to bring it back in line with that steady uptrend at least. So, you are looking at this thing probably heading back down to that sort of area. So that's really how I see it. Moving on to the Aussie dollar, we've seen that that's cracked. This is the long-term picture of that Aussie dollar. And you may remember I've been analysing this for quite a while. This is going back a few decades where we've got this big, long downtrend in place. And I was saying to you, you're looking at the sell zone of the major waves. That's the area where you expect things to turn down. I told you about the monthly sell pivot when it happened a long time ago. And then just recently, when it was 74 cents, I said, this is going to sell off from here. And you can see, testing up in the sell zone again and turning down. So now, I said the other week, if it went under 70 cents, it would go straight to 68, which is what we're seeing, back to that point of control. Look, is there going to be buying support there? Maybe, but ultimately I doubt it. I think looking at this, the very long-term downtrend we've got here, this thing could rotate all the way down to that level there. So that would be, a longer-term target on the Aussie dollar down to 62 cents. So that could be what's coming. But the currencies really do move in fits and starts. They're very difficult to predict, but that would be my long-term expectation on that. And US dollar as well breaking out. I think that is going to head higher. I showed you this last week. I really this is looking at. Really, we'll start with the distribution just to give you a sense of how these things move. We've got the big wave higher, the reaction, and then I'm making all calculations off that. And I've had these calculations in here for years on this US dollar. And it's just interesting for you to note, we've got this range. I've got the areas where I expect to see reversals, which is, the buy and sell zones within the range. And then the area outside the range, that 25% outside there, and then the 618 outside. So they're the areas where I expect to see reversals. And you'll see, over the last 5 years, it's been pretty steady, hasn't it? We've got this range, we've got little false breaks constantly happening, prices hitting the 25% above, back to the point of control. So back to the 618, back to the point of control. So once you understand how these things work, you really can start to predict and get a sense. But I reckon that 5 years or 7 years of range trading is over, and we're about to see the trend in this US dollar to the upside. And where does it stop? We've got one range here for years, and next range here, and now do we see something similar, as I said last week, to what we saw here? It sort of feels like that to me. Yes, that hopefully gives you a bit of a sense of what's going on there with these currencies. Bitcoin getting hammered, just looking at the whole rally from 2019 up to that high at 60,000, 69,000. I said it was a sell on a weekly sell pivot up above 60,000. I've got the monthly sell pivot there, key bar down there, selling coming in where you'd expect and falling over again through that $30,000 low. It could have a little false break here and rally, but it's looking pretty dangerous, and I'd really expect it to head down to that buy zone. So I think ultimately this Bitcoin is heading towards that 10 to 20,000 level. And look, that could be fabulous buying. That might be the point where the big clear out has happened and it's off to the races again. But for now, I'm a bit bearish on those Bitcoin and crypto. And yeah, look, I think I've really talked enough. I was going to have a look at wheat and corn and that sort of thing, but I think I've rabbited on far too long. So I'll leave it there. Just outlining for you, things have cracked. Things are progressing as expected. Expect short squeezes along the way, but possibly use those opportunities to lighten the load a bit. I think bigger picture, we're in for a bit of a rocky road. But short term, yes, definitely the possibility that we see a bit of a rally from this zone. All right, check out what I'm doing at Pivot Trader. Please sign up now that I've hopefully shown you how my stuff works. And I'll come back with more next week.